I think that if you think about SoftBank and the governance changes and the way they're deploying capital, they have built a pretty big portfolio of some of the premium names in the space. And although they get a lot of heat for companies like WeWork who haven't performed, companies like Coupa and even Uber at this point have been solid performers.
That's right. At the same time, they've been criticized for creating this kind of bubble effect in Silicon Valley overall, where they're almost criticized for hurting companies more than they help them when they invest, because it forestalls the ability to have to really, figure out how to run your company well and profitably, because you can just count on this SoftBank capital. So if, again, going back to what Elliott wants to do here, if they're pushing SoftBank to kind of change its ways, does that mean a draining of liquidity out of that market?
SoftBank's just a small part of the ecosystem for some growth companies. It's actually almost an IPO replacement. So a lot of the companies who might have raised money from SoftBank might go public earlier. But if you think about corporate governance and a focus on metrics and really driving business value, that might be better off for everybody in the ecosystem.
Oftentimes in cases like this where an activist investor comes in and buys a sliver, they say, we come in peace. Will this end in peace?
It usually doesn't. Anyone who has to declare they come in peace sometimes has to be questioned. I think what you're going to see is SoftBank has such a variety of assets, from the wireless assets to some of the media assets, obviously all around the world. And I think the portfolio that they see in the Vision Fund has some value. You could probably get some liquidity, whether in your public names like Uber, or companies are on the edge of liquidity and going public. And I think it'll be more around driving liquidity of their liquid and semi-liquid assets.
Rick, where are we in the post-WeWork IPO market? Casper is trading well today, but it priced well below what was hoped, and it's worth maybe half of what it was worth at this time last year.
So you saw a little bit of the WeWork contagion, and I think the public markets adjusted faster than the private markets to a focus on unit economics and driving real business value. Companies who didn't adjust to that have been punished a little bit. And I think if you look at Casper, had a great day today, created hundreds of millions of dollars in value, but their unit economics and some of their elements were not great, but have traded up. One Medical went public last week, has traded up, is trading at 10, 11 times revenue, therefore a very healthy IPO and very healthy multiple for a company with those types of metrics. I think that there'll always be an interesting public market, and as long as there's substantial liquidity in the market continues to hit all-time highs, there'll be a lot of market appetite for IPOs.
This is a company that hasn't made money.
Not yet. In Casper or One Medical, or I guess, or in both, I think Casper is going to be challenged because the unit economics aren't working today, and they're hoping on building a brand over time. I think some of the best companies, which you'll see, and you're going to see an Airbnb IPO and maybe a couple other commerce IPOs, are companies that have strong gross margins, have strong growth, and are able to make money on the first purchase of their customers.
What about this firm debuting today, PPD, a biotech research services company? PPD sounds like postponed to me. That's what it is, but it wasn't postponed, and it did pretty well.
That's they beat expectations then.
Yep.
So they. I don't know much about it, but it feels like there is fundamental demand for IPOs of all sizes, and Casper at this point is kind of a small cap and not a multi-billion-dollar IPO, which you would have thought several months ago. So you're seeing public market investors who have appetite for all IPOs of all sizes, and it's a sign of a healthy market.